This video is going to be taking a look at the 2023 Deferred paper, and we're going to be looking at question 1B that came up that year, which was a manufacturing account for a company called O'Brien Limited. So as always, we're going to go through it using our 5 steps. So step 1, we will lay out our accounts, which should take us no longer than 5 or 6 minutes. Step 2, we will transfer our figures into the accounts from the trial balance, which will take 6 or 7 minutes. Step 3, we will calculate investment income and debenture interest for the year, 3 or 4 minutes. Step 4, we will complete the adjustments, which will take approximately 32 minutes. And step 5, we will tot up the totals for 5 minutes. So in total, question 1 should take us no longer than 54 minutes. If it does, you need to move on quickly to whatever question is coming next. Here is an example of a question 1 completed using the face of the accounts to do all of your workings. Okay, so there's no workings pages here in this account. So reason for that, I just suggest that you do as much workings as possible on the face of the account so that you don't forget to transfer figures in, number 1. And 2, sometimes students take across figures from their workings incorrectly, losing marks there as well. So let's get stuck in then. Step 1, you lay out your accounts. So this is the layout of a manufacturing account. You can see that it is just a simple trading profit and loss and balance sheet, but with an additional manufacturing account thrown in there at the start. So you can see that they have direct costs, which are costs that are directly related to the making of whatever the product is. The total of the direct costs will equal to the prime cost. Then we're going to have factory overheads. That will equal factory cost. We will then add work in progress 0101. We will then take away work in progress 31st of the 12th. We will less sale of scrap materials, and that will be equal to the cost to manufacture. Okay, so if you want to do this question with me, you can just pause the video now and write out that layout. Okay, step 2 then, we transfer the figures into the accounts from the trial balance, and this will take 6 or 7 minutes. So we're literally just looking at the trial balance here. What we'll do first of all is we'll go down through it and see what goes where. So the authorised capital at the top, that's going to go into the balance sheet financed by capital and reserves. Then we'll know from our alert diagram that we always talk about, the A, L, E, R, and then the T is the T account. So you can see there, assets and expenses are on the left-hand side, the debit side, and liabilities and revenues are on the credit side, the right-hand side. First, we have factory buildings. That's going to go into the balance sheet, tangible fixed assets. Next, plant and machinery will go in the same place. Patents will go in the balance sheet in the intangible fixed assets. General factory overheads are going to go into the manufacturing account. So into the manufacturing account is going to be any costs or revenues that are associated with the factory. Okay, so just think about the factory. So general factory overheads will go into the manufacturing. Higher special equipment will go into manufacturing. Sale of scrap materials, the same place. Then opening stock of raw materials and work in progress will also go into manufacturing. Finished goods will go into the trading account. Purchase of raw materials will go into the manufacturing account. Sales will go into the trading account. Carriage and raw materials will go into the manufacturing account. Selling expenses will go into the TPL, selling and distribution expenses. Direct factory wages will go into manufacturing account. Admin will go into TPL admin. Issued share capital, you've got balance sheet financed by capital and reserves. Profit and loss balance 0101. It is a profit because it is on the credit side. If that figure was on the debit side, that would be a loss. Then we have VAT and bank are going to both go into the balance sheet creditors minus 1 year. Then we have 7% debentures, balance sheet creditors plus 1 year. Then we have 3% investments purchased on the 1st of the 8th. That is balance sheet financial fixed asset. Investment income received will help me establish how much investment income will be due at the end of the year, which will go into the balance sheet current assets. Dividends paid will be taken away at the bottom of the TPL. Debenture interest paid will help us work out how much debenture interest is due at the end of the year, and that will go into the balance sheet creditors minus 1 year. Debtors, we have balance sheet current assets, and creditors, we have creditors minus 1 year. Capital reserve then, we have that in the balance sheet financed by capital and reserves. So looking at our manufacturing account, we can shove all our different bits and pieces in here. So general factory overheads, 95,800 goes into factory overheads. Hire special equipment, that is a direct cost because it is directly related to the making of the product. So that will go into direct costs. Sale of scrap materials will be taken away down the bottom. Okay, 10,200 there. Opening stock of raw materials, that can go straight in because that is a figure from last year, so that is not going to change, as is the work in progress on the 1st of the 1st. The purchase of raw materials, 585,000, is going to go up the top in the direct costs, as is the carriage on raw materials, 15,800. The direct factory wages is going to go into the into the direct costs, 315,000 there. So that's all your figures for the manufacturing account. Next, we'll fire everything else into the trading profit and loss in the balance sheet. So the first thing there, we have the authorised capital. That is from the top of the question. Okay, so that is the amount of shares that we are allowed to sell. The issued, we'll find that later in the trial balance. So the first thing we have is the factory building. So 900,000 is the cost. And then the accumulated depreciation is the difference between the 900,000 and the 812, so that is 88,000 accumulated depreciation. Plant and machinery, 730,000, and then the difference between that and the 680 net book value is 50,000 accumulated depreciation. Then we have patents, 80,000. Then we have general factory overheads. We already put that into the manufacturing account. We did the same with the hire of special equipment, same with the sale of scrap. Same with raw materials, work in progress. Next, we have opening stock of finished goods, 71,000, which can go straight in. Purchase of raw materials went into the manufacturing account. Sales will go into my trading profit and loss, 209,100. Carriage on raw materials went into the manufacturing account. Selling expenses will go into my selling and distribution, 94,000 there. Directory factory wages went into the factory. Admin expenses, 108, goes into administration. Issued share capital, 600,000 and 230,000, that is 830,000 altogether, goes in under the issued. Profit and loss balance on the 1st of the 1st, the profit, 5,300, can go straight into the bottom of the P&L. VAT and bank, we're putting them in the same place, creditors minus 1 year because they're on the liability side. 7% debentures, we're putting it into finance by creditors plus 1 year. 3% investments, we're putting that into financial assets in the balance sheet. Investment income received is going to tell me how much investment income I will have due at the end of the year. So that's what I've received. It's not what what is due to come to us for the year. So there will be investment income due. Every single question there is. Dividends paid, bottom of the TPL. Debenture interest paid, 2,200. That is going to be debenture interest due, whatever it is for the year, minus 2,200. Then we have debtors and creditors. So debtors, 45,000. Creditors, 52,000. Into creditors minus 1 year. Capital reserve then, 30,000. Okay, so that is the all the figures inserted from the trial balance. So you'd want to double check that you have all of the figures put in correctly. Step 3 then, we're going to calculate the investment income and debenture interest for the year, and that will take us 3 or 4 minutes. So just a reminder, how does this all work? So the investments themselves are going to go into the financial assets in the balance sheet. The investment income for the year will go in here. So whatever is due for the current year, so 2022, that is what is going to go in here. And that goes in here even if we have not received it. Investment income due then will go up in our current assets. So whatever it is for the year, minus 1,500 that we have received, will be our investment income due at the end of the year. Next, we look at the debentures. So debenture, just a long-term loan, fixed rate of interest. Okay, so the debenture itself is going to go down into creditors plus 1 year. The amount of debenture interest that needs to be paid for the year, so whatever relates to the current year, is going to go into the bottom of the TPL. And then debenture interest due at the end of the year is going to go into creditors amounts falling due within 1 year. Okay, so That is very important to get that right, because it happens in every other question in section 2 as well. So you need to get into the habit of just calculating your investment income and debenture interest due. Okay, so the investments, we have 3% investments acquired on the 1st of the 8th. So we had them for the whole month of the 8th, we had them for the 9th, we had them for the 10th, we had them for the 11th, we had them for the 12th. So that is 5 months, okay? So make sure that you include the 8th month there, because you got them on the 1st of the 8th. So 150,000 multiplied by 3% multiplied by 5 over 12 is €1,875. When we look at the debentures then, we have 200,000 debentures multiplied by 7%, that is €14,000. So manufacturing account, no impact on the manufacturing account. Investment income, 1875. And then we will work out, okay, how much investment income is due. So we can see here, we are owed 1875, but we've only received 1500. We might receive some more, but if we didn't, we'd have €375 investment income due at the end of the year. The debenture interest is 14,000. Okay, and as you can see here, we've only paid 2,200. Now we'll see, have we paid any more during the year? But if not, we will owe €11,800 at the end of the current year. Okay, so that is steps 1, 2 and 3 completely done, right? So you have a lot done at this stage, okay? And the only time you use your calculator was to work out your investment income and your debenture interest, right? So you haven't done one adjustment yet. So you've got a lot done, you've got a lot of marks banked, and you're well on your way to completing your question 1. Step 4 then, start your adjustments, and you should have approximately 32 minutes to do this. So you can see in this question we have 9 adjustments, and we're just going to start straight away and get through it as quick as we can and as efficiently as we can. So the following information and instructions are to be taken into account. Number 1, stocks on hand at 31st the 12th, 2022. Raw materials, €37,800. Work in progress, €22,100. Finished goods, €72,000. So with regards to manufacturing accounts, right, you can see we've got a lot of different types of closing stock. Raw materials, materials that we have to make the goods. Work in progress, we have like a hoodie that's half made, you know, there's no arms on it yet. And then you've got the finished goods that are ready to be sold. So the raw materials and the work in progress are going to go into the manufacturing account. And then the finished goods will go into the trade and profit and loss account. But all 3 of them will go into the balance sheet. Okay, so raw materials up at the top there, closing stock of raw materials, 37,800. Work in progress, 22,100. And then you've got the finished goods, 72,000 up in the trading account. All 3 of them then will go into the current assets, because that's closing stock at the end of the year. So that is adjustment number 1 done. Adjustment number 2, during the year, stock of raw materials which had cost 5,800 were destroyed by fire. The insurance company agreed to pay compensation for 90% of their original value. No entry has been made in the books in respect of the fire. Okay, so look, raw materials were damaged. They cost 5,800 in total, okay? So 5,800 is what they cost. Unfortunately, the insurance company is only going to pay them 5,220 because that is 90% of 5,800. So 5,220 is what they're getting. So they're losing 10%, €580 of the €5,800. And that's just a loss on the insurance claim, and that is really unfortunate. Okay, so how are we going to record this? Well, the purchases of raw materials, we're going to take 5,800 away because they've been damaged. We also have to show that there is a loss on the fire claim, so we are treating that as an expense. Okay, so loss on fire claim is going to go into factory overheads. So unfortunately, they just didn't pay us the 100%. And the insurance company has not yet paid us the 5,220. Okay, so we are going to put that into the current assets, insurance claim due 5,220 in the balance sheet. Number 3 then, finished goods were sent to a customer on the 31st of the 12th, 2022 on a sale or return basis. These goods were recorded in the books as a credit sale of 20,400, which is a markup on cost of 20%. Okay, so finished goods were sent to a customer on the 31st of the 12th, 2022. Okay, so sale or return basis. Basically, what's happening here is they sent the goods to a customer on a sale or return basis. So we should not have recorded that in the books, because a sale or return basis is when we're saying, come here, you can try and sell them. If you sell them, happy days, we'll send you an invoice then and we'll charge you. Sale or return though, we're not going to charge you until you tell us you've sold them. So they should not have been recorded in the books as a credit sale. So we need to rewind this, okay? So we need to rewind this. So rewind the credit sale. What we're going to do is we will minus the 20,400 from sales and minus 20,400 from debtors, because the bookkeeper accidentally recorded it as a credit sale. So the bookkeeper accidentally added 20,400 to sales and added 20,400 to debtors. So we're unwinding that now, okay? And then these goods were recorded in the books as a credit sale of 20,400, which is a markup on cost 20%. So we need to find out what is the actual cost price of that. So 20,400 divided by 120 multiplied by 100 would be 17,000 euro there. So 17,000 euro is the cost of the closing stock. The bookkeeper said that that had left the business, so they minused that. But now we're fixing it, so we are adding it back on. Okay, so that is the crack with that. You never know in the future, they might tell us, look, we sold them. Then we can record it as a credit sale, but not right now. So that is adjustment number 3. Adjustment number 4 then. The suspense figure arises as a result of discount allowed 800 entered only in the debtors account and credit purchases of raw materials 3,000 which were entered on the incorrect side of the creditor account. Okay, so suspense accounts are set up because we make mistakes. Okay, so we're just going to look at one mistake at a time, and we're going to use the trial balance to help us correct the suspense account. So the suspense figure arises as a result of discount allowed 800 entered only in the debtors account. Okay, so discount allowed 800 entered only in the debtors account. So the discount allowed needs to go into the debtors account, which it did, but it also needs to go into the discount account. Now, we cannot see a discount account here anywhere, so we're going to have to create a discount account. And now it's discount allowed, so we are going to debit the discount allowed. So debit discount allowed, because that is an expense and we record expenses on the debit side. Now your two sides do not equal now. So we need to go to the item incorporating suspense, which is general factory overheads up here. And we need to, if we have plus 800 on the debit side, we will need to minus the 800 then from the debit side as well to even it out. So if you plus 800 and minus 800 on the debit side, your accounts, your two sides will equal. And so that is perfect then. So that is mistake number 1. Mistake number 2 then is a credit purchase of raw materials 3,000, which was entered on the incorrect side of the creditor account. Okay, so there is a little bit of explaining to do in this here. Okay, credit purchase of raw materials 3,000 entered on the incorrect side of the creditor account. So creditor account, okay, is a liability account, and as you can see up here, right, liabilities, they would increase on the credit and they would decrease on the debit. So if we had credit purchase of raw materials, we should have 3,000 on the credit side. Okay, so that's what should have happened. Now, what the bookkeeper did by mistake, so I'll put it in red to show that they did it by mistake. So what they did is they put the 3,000 on the debit side of the creditor account. Okay, so that is the crack there. Now, to fix it then, what we need to do, we need to enter the 3,000. Okay, so enter the 3,000 here. And then to fix the creditor mistake, you would have to put another 3,000 there. So that would be putting 6,000 on the credit side of the creditor account. So we will do that. So 6,000 on the credit side of the creditor account. So plus 6,000 to the creditors there. Now your two sides will not equal, okay? So what we'll have to do to our item incorporating suspense up here, we will add 6,000 to that side as well. So your debit side has add 6,000, your credit side has add 6,000. So that is how we use the trial balance to help us do the suspense adjustment. So we don't need T accounts to help us here. So how will it impact the accounts? Well, your general factory overheads, you will minus 800 and you will plus 6,000. In the TPL in the balance sheet then, you will add 6,000 to the creditors. Okay, so you'll add 6,000 to the creditors, and the discount allowed, you will add 800 into the selling and distribution. Okay, so that is the suspense adjustment fixed then, and that's it, completely done. Okay, adjustment number 5 now. Patents are being written off over 7 years, which commenced in 2020. Now, we are doing these books for 2021, okay? So they have been written off for 2020 and they have been written off for 2021 as well. So that's 2 years they have already been written off. So 2 of the 7, so there are 5 years left. So this 80,000 up here represents 5 years. So 80,000 divided by 5, 16,000 euro there. So you're going to have in the manufacturing account, patent written off, 80,000 divided by 5, 16,000 euro in the factory overheads. Up in the balance sheet, in intangible fixed assets, 80,000 minus 16, 64,000 euro. So that is the patents there. And that is the patent adjustment completely done. Adjustment number 6 then. So included in the figure for sale of scrap materials is 8,000 euro received from the sale of an old machine on the 31st of the 3rd, 2022. Okay, this machine had cost 40,000 on the 30th of the 9th, 2018. Plant and machinery is to be depreciated at the annual rate of 15% of cost per annum, calculated from the date of purchase to the date of sale. Okay, so in manufacturing accounts, our depreciation of fixed assets thing, you know, we usually have in company and sole trader, we have delivery vans, but here we have plant and machinery. So it's more or less the same, okay, just a couple of tiny differences, okay. Now, included in this figure for sale of scrap materials is 8,000 received from the sale of an old machine. It's important that you know that sale of scrap materials is a very completely different thing compared to the sale of an old machine. Okay, they are not the same thing. So scrap materials could be like bits of wood, bits of material, whatever, but plant machinery, very different. So included in this figure for sale of scrap materials, 10,200 was 8,000 for the sale of the old machine. So we're going to take that out of there because it is not sale of scrap materials. So that is taken out of there. Now, this machine had cost 40,000 on the 30th of the 9th. So what we'll do, we'll adjust the cost. So we've got plant and machinery cost, 730,000, and then minus the 40,000. So that gives us a cost of 690,000 euro there at the end of the year. Now that we know we had 730 at the start of the year, and now we have 690. Now we can do the depreciation charge for the year, but remember we have to do it calculated from the date of purchase to the date of sale, okay? So we need to take a look. For the first 3 months of 2022, we had plant and machinery that was 730,000, and for the last 9 months of the year, we had plant and machinery that was worth 690,000. So looking at our factory overheads then, that's where we're going to put our depreciation of plant and machinery. So you can see here, 730,000 multiplied by 15% multiplied by 3 over 12 gives us 27,375 euro. And then the last 9 months of the year, 690,000 multiplied by 15% multiplied by 9 over 12 is 77,625. We add both of those together and we get 105,000 depreciation for the year. Then we work out, we get rid of a fixed asset. We have to figure out, did we make a profit or did we make a loss on the sale of the machinery? So the cost of the machinery that we got rid of was 40,000. Then we have to work out the accumulated depreciation on that machine. So if it costs 40,000, right, we have to look and see when did they buy it. So they got it on the 30th of the 9th, 2018. So they had it for 3 months of 2018. They had it for all of 2019, 2020, 21. And then for 2022, they had it for 3 months of 2022. When you tot all that up, you get 42 years. So working out the accumulated depreciation then, 40,000 multiplied by 15%, multiplied by 3.5 years, or you can do 42 over 12, and that gives you 21,000 accumulated depreciation on the sold plant and machinery. That gives you a net book value at time of sale of 19,000 euro. And if you compare it to the proceeds of 8,000 that you received for that, that gives you, unfortunately, a loss on sale of plant and machinery, 11,000 euro, which we will put into the factory overheads. Last thing that we have to do then, we have to do the accumulated depreciation in the balance sheet, and we'll be taking a look, we'll be adding in the depreciation for the year, 105, and we will be subtracting the 21,000 for the machinery that has gone. So 50 plus 105 minus the depreciation on the sold gives me 134, which we take from 690 and we get 556,000. So that is the tangible fixed assets done then, the plant and machinery completely done. Next, note number 7. Buildings are to be depreciated at 3% of cost per annum. Depreciation on buildings is to be allocated 90% to factory and the remainder to office administration. It was decided to revalue the buildings at 1.1 million on the 31st of the 12th, 2022, and this is to be reflected in the accounts. Okay, so did anything happen my buildings? Nothing happened my buildings in this question. They are still 900,000. Okay, so nothing has happened so far. Now, we're just told 3% per annum, and there's no land, right? There's no land in this. If there was land in this, we would be minusing the land because we do not depreciate land. Now, we were told to put 90% of it into the factory. So that is 24,300 euro. So it's 27,000 is 100%, 90% is 24,300 going into the factory, and the remainder will go into office administration. So the remainder, depreciation buildings, so the 10% here, 2,700 will go into administration. Now the total 100% is 27,000, so that would be added to the already accumulated depreciation of 88,000. But the last paragraph here, it was decided to revalue the buildings at 1.1 million on the 31st of the 12th, 2022, and this is to be reflected in the accounts. Okay, so we are going to revalue the buildings. Okay, so the buildings are now 1.1 million. We're going to have 0 accumulated depreciation, and then we've got 1.1 million then in the net book value. Okay, now when we revalue a fixed asset, we will have to create a revaluation reserve. So how do we do it? Well, we've got 3 figures here because revalued at the end of the year. So we have the difference between what the new value is and what it costs. So the 1.1 million and the 900,000. And then what we're doing, we're just adding back in the 88,000 accumulated depreciation that was in the trial balance and the 27,000 depreciation for the year. So it's like you're unwinding any depreciation that has ever occurred on those buildings. Okay, so that is the buildings adjustment done. Adjustment number 8 then is the bank adjustment. So it says the figure for bank in the trial balance has been taken from the firm's own records. However, a bank statement dated the 31st of the 12th, 2022 shows an overdraft of 300 euro. A comparison of the bank account and the bank statement revealed the following discrepancies. Number 1, rent of €6,000 for 4 months ending 28th of the 2nd, 2023 was paid directly into the firm's bank account in relation to spare office space being let out by O'Brien Limited. Number 2, a cheque for $1,500 received from a debtor was dishonoured. This has not been entered in the books. And 3, a cheque for fees of $3,200 issued to a creditor had not been presented for payment. Okay, so look, there's a lot of stuff going on here. It looks like an awful lot of information, but we can break it down and it's not going to look too bad at the end. Okay, so we can lay out a tiny little working like this. So if you want to go to a workings page, but all you'll need is like 4 or 5 lines, okay? So there's discrepancies between the bookkeeper's bank figure and the bank's bank figure, okay? So the bookkeeper's bank figure is 8,000 overdraft, because on the credit side that's an overdraft. The AIB bank statement figure shows an overdraft of €300, so that was up at the top here. Now, there are a few different discrepancies, so 3 different discrepancies. So by the end of this, we should have the same bank figure, okay? So number 1, rent of €6,000 for 4 months ending 28th of the 2nd, 2023 was paid directly into the firm's bank account in relation to spare office space being let out by O'Brien. Okay, so that was paid directly into the bank account, so AIB knew all about that, so there is nothing to be done to their bank figure. €6,000 coming into the firm's bank account is going to reduce the overdraft by €6,000. Now, the €6,000 was for 4 months and it was ending after 2 months of next year, because we're doing the books for 2022, so 2 months of next year. So we can split that up into €3,000 rent received this year and €3,000 rent receivable prepaid for next year. So the rent receivable for this year will go into add operating income, and the rent receivable prepaid in the balance sheet at the end of the year will go into creditors minus 1 year. So that is number 1 done there. Number 2, a cheque for $1,500 received from a debtor was dishonoured. This has not been entered in the books. Okay, so a cheque received from a debtor was dishonoured. So this has not been entered in the books. So if a cheque was dishonoured, basically the bank told the debtor, or the bank told you, okay, look, this has been dishonoured. So the bank knows all about it, AIB knows all about it, and so we won't do anything to their account there. Now, what we will do here is we need to say, okay, right, so the cheque received from a debtor was dishonoured. So we had said that that was $1,500 coming into the bank. But now we're going to have to record the opposite, and we'll say it's like $1,500 has gone out of the bank. So that is going to increase the bank overdraft there. And now debtors, right? The debtors owe us €1,500 again, because we need to get on the phone to them and say, come here, that cheque has been dishonoured, you owe us €1,500, so please send it in any other way that you possibly can. Thanks very much. There's no talk of debtors being written off or anything like that. No talk of bankruptcy or liquidation or anything. So the debtors just owe us that money again. So we add $1,500 back to the debtor. Last then, number 3, a cheque for fees of $3,200 issued to a creditor had not been presented for payment. So look, the bookkeeper had given the creditor the cheque, so we can assume that she entered it into the bank account and into the creditor account, but the creditor hasn't gone into the bank to lodge it, okay? So they haven't done that, okay? So they have not gone into the bank to lodge it. So AIB doesn't know anything about that. So we can assume that the bookkeeper has nothing to do because they've done it already, okay? But we have to record what would happen to AIB's bank figure if 3,200 was going to come out of it whenever the creditor will lodge the cheque. So 3,200 cheque being lodged will increase the overdraft of 3,200. So in total then, right? Bookkeeper's bank figure, 8,000 minus 6,000 plus 1,500 gives us 3,500 overdraft. And then the AIB bank statement figure will be 3,500 overdraft as well. So our two bank figures should equal. If you do not get them to equal, you have made a mistake. So it'd be very easy for you to fix your mistake when you know that both sides need to equal. So whatever you need to do, you just make sure that you have got them equaling, okay? So maybe you made a mistake plussing or minusing. You'll be able to figure it out when your two sides don't equal. So how will this look then in the accounts? So there's no impact on the manufacturing account, but in the TPL and the balance sheet, in the bank, we have bank 8,000 minus 6,000 plus 1,500 gives me the 3,500 overdraft. We've got rent receivable in the odd operating income, €3,000. We've got rent receivable prepaid in the creditors, minus 1 year, because we owe those people that space in our place, okay, wherever we're renting out, or the office space. And then we have the debtors plus 1,500. So that is the bank adjustment finished. Adjustment number 9 then. Provision should be made for the following. Number 1, investment income due and debenture interest due. So no impact on the manufacturing account. So investment income due, right? We have only received the 1,500, so we have 375 yet to receive. So our investment income due, current assets, 375. Our debenture interest due in the creditors minus 1 year, 14,000 minus 2,200 is 11,800 into creditors minus 1 year. Number 2 then, the creation of a provision for bad debts equal to 6% of debtors. So no impact on the manufacturing account, but we have to work out the debtors. So debtors there, €26,100. We'll multiply that by 6% then, and that will be bad debts provision, 1,566. So it has to be created, so it had not existed already. So we are creating it. Now you'll see I have not put that directly underneath the debtors figure because there was other things that came up in the meantime. That's absolutely fine. You can draw your little arrow to show that you're taking it away from the debtors figure, and that's absolutely perfect. Now, that bad debts provision had not ever existed yet. So we have to put the total amount into selling and distribution expenses, bad debts provision, €1,566 there. So that is note 2 done. Lastly then, number 3, a transfer of €20,000 should be made from the profit to the capital reserve. So that will have no impact on the manufacturing account. But at the bottom of the P&L, we have less transfer to capital reserve, 20,000, and then in the balance sheet, capital reserve, add 20. So that gives us 50,000 altogether. So that is absolutely everything done. Now you're ready to move on to step 5, which is just tot up your totals. So 5 minutes is all you should take on this. You should not take any longer. If you take any longer, you're taken away from marks that you could be getting in other questions. So do not be tempted to spend 10-15 minutes here, because it'll cost you a lot more than what you could get in marks wise for that. So that's what we're looking like now. We just need to tot everything up and bring it all out. So purchase raw materials, carriage raw materials, we take away the closing stock of raw materials, we add the fire special equipment, the direct factory wages, the prime cost, which is the total of the direct costs, is 982,100. We tot up our general factory overheads, then we add all those costs up, 257,880. That gives me a total factory cost. So we are adding these now because these are costs. So we're just totting up all the costs. So 1,239,980. Add work in progress 01, 13,5. Take away work in progress 22,100. Less sales scrap then 2,200 gives me a cost of manufacture 1,229,180. Then we look at the TPL and the balance sheet. So sales, the cost of manufacture, we're bringing that over from the manufacturing account. Our sales 207,700. We take away our closing stock, and that gives me my cost of sales of 1,211,180. take that away from the sales, and then we have 860, 520. Our selling and distribution expenses, we tot them all up. We get 96, 366. Admin expenses, we get 108, 000. Tot the admin expenses up, 110, 700. Add that to the 96, 366. That gives me 207, 066. We take that away from our gross profit, and then we get 653, 454. Add the rent received to get the operating profit of 656, 454. Add the investment income, take away the debenture interest. There is no corporation tax, so we can just take away the 62,000, take away the 20. That gives me a retained profit of 562, 329. Add the profit and loss balance of 53. That gives me a profit and loss balance at the end of the year of 567, 629. Tot up everything from the balance sheet. So in the closing stock, you can see I've just got one bracket there, and I can just tot up all of the different individual figures for the raw materials, work in progress and finished goods, and I get 148,900. I tot up my current assets, I tot up my creditors minus 1 year. That gives me a working capital of 92,629. That gives me a total net assets 1,962,629. Finance by section then. Creditors amounts falling due after more than 1 year, 200,000. Then we have the capital and reserves, we have the reval reserve, we have the capital reserve, and then we add the P&L balance. That gives me 1,762,629. Add that up then, 1,962,629. So that is the manufacturing account then for O'Brien Limited, which came up in 2022 as the deferred paper.